Slipping oil prices, slowing growth overseas, and the strengthening dollar are all in focus as earnings reports roll in. Joining me now is Jim Dunigan, Chief Investment Officer at PNC Asset Management. Hi, Jim.
Hi, Sue. How are you?
Great, thanks. So foreign currency translation shaved profits for Ford in some parts of the world like the Asia Pacific, but the American automaker did manage to beat sales and earnings expectations. When it comes to these companies exposed to the U.S. dollar, are some companies just better able to navigate the stronger greenback's impact on their earnings, and how?
A lot depends, Sue, around product mix. So you saw the numbers from Dow this morning, and much better. So they were, by the way, they source their products and make their products around the world. It sort of evens out. So it's not the same for every company. But what we saw in Procter Gamble and others, more exposed to that dollar. So what we're watching for is how those companies responded to both the pace of the decline or the strength of the dollar and the amount of it. So I think we'll see that even out as we go into the balance of this year, but certainly for the fourth quarter, whether it's crude oil or the currency, both had significant impact, but different from company to company.
And when it comes to the move in the dollar, the markets don't seem to think that the move is done. What are the chances you think the euro will ever go to par with the U.S. dollar as leaders there want to make Eurozone companies more competitive?
I think there's probably a pretty good chance, not in 15, but I think in 2016, that we'll see parity. We'll probably continue to see a strength in the dollar, and we'll get into the dollar, 7, 8 for 2015. But there's a chance, and I think it's a good one we'll see parity as we get into 12, 18 months out.
And when it comes to this country, people filing for jobless benefits are now at almost 15-year lows. That fits well with your overall picture of a solid economic growth here in the U.S. But when it comes to the markets, trading here has been off to a choppy start this year. Should investors be looking at these triple-digit declines as buying opportunities, or do you think this is the beginning of more worse things to come?
Well, I don't think it's a beginning of more worse things to come, but certainly the opportunities here will be a little bit difficult to pick out at the right time. So we do think that the U.S. economy is on stable footings. The Federal Reserve supported that yesterday when it's upped its assessment of the prospects for the U.S. economy. But there are a number of crosswinds, as we've talked about, whether it's crude oil and the decline, which we think is a net positive, the shift in currencies, interest rates, credit around the world. Will continue to provide some crosswinds. I think we've talked about for some time that we've gone, a extended period without a 10% correction. So we think that this corrective phase can continue. We're probably 4.5% into it. Whether we'll see 10% here, we'll have to wait to see. But I think in general, in these opportunities, if we see some shifts in the markets, investors should be looking to position their portfolios accordingly. But I think the balance of the year will be positive as we move forward.
Thanks so much for speaking to me today, Jim. I love that seize and shift idea. Jim Dunigan is the Chief Investment Officer at PNC Asset Management, and I'm Susanna Lee for The Street.